Arnaud, welcome back. Gosh, it's been such a long time. Looking forward to talking to you.
Hey, Dale, can you hear
Arnaud,
me?
yeah, it's been a real long time. I can hear you.
It
Welcome
has
back
been.
to Face.
Thank you so much for having me. I am really honored and stoked and excited to be on your show again. It's been almost 3 years, believe it or not.
Oh my God, that's you're back in the you're back in the rotation. You know, sometimes things
Thank
just
you.
end up on the slip through my fingers like trades. So do you
It's
want
okay,
to
no worries.
share your screen? Have some things to talk about?
I think we have some things to talk about. Yeah, what should we talk about? Let's see. Where do I share my screen?
It's on the bottom green box. Share screen. See it? You just scroll your cursor on the bottom and they have different icons. Chat, share screen.
Share screen. There we go.
Yeah.
Share. Okay.
Okay. So looks like we're going to be looking at, if you could just, yeah, there we go. All right.
All right.
So big picture for Bitcoin.
Oh, no, that's just something that was up there. We can talk about
Okay.
anything you want.
Okay.
I
Well,
guess
I'd like to
indexes.
be updated because when you got a hold of me, several months ago, I think that you were probably in the camp, and I want to know if you still are, even though one more, there's been one more decline since that, since that happened. Is this still a 4 with a 5 to come in the upside in the S&Ps? Are you still looking at that count, or has it
Yeah,
been
we can.
negated?
No, it has not. There's several ways to look at it. Let's see if I can move this bar here a little bit. There's a
Whatever you came prepared to talk about is fine. I
that,
just remember that was
yes.
the reason,
No,
because you said it seemed like such a long time. I think you said to me, well, we could be there by then.
we could be. I think that was somewhere in February. So, let's go back a step here. So this is the S&P 500 pretty much since the all-time high,
Yeah.
which I've
Yeah.
labeled here as the third wave top. Since then, this market has been extremely tricky in its path. This is what I would call a double zigzag. So I always say, when you have 3 waves lower, expect at the minimum 3 waves back up. In Elliott wave, for those that are not too familiar with Elliott wave, the market moves longer term in impulses higher, which are 5 waves. As you can see here in this little advance here from October into November last year, you get 1, 2, 3, 4, 5, if you can follow my cursor. It's loud and clear for everybody to see. And then here again in December, you get 5 waves higher. Those are relatively easy to track. They don't have to have too many deviations, but corrections are extremely tricky. So what we've seen so far, ever since the all-time high, is only 3 waves. Everywhere you kind of look, some of these 3 waves then become smaller fractals, 5 waves, but it's all what I would call a double zigzag. So at some point when you've done 3 waves,
You are a little muffled, or no? Are you using a mic or
I'm
what?
using a microphone. Can you still hear me?
Yeah. It's
All
just
right.
a little bassy and stuff. Maybe just a little louder would be good. Thank you.
All right. Let's give it a try. This better?
Yeah, it is.
Excellent. All right. It was
Okay.
a little. There you go. I can hear you better too.
Okay.
So now that we have so many smaller waves up and down, when you see a beginning of a impulse higher, which is 5 waves, you start to think we might start a new uptrend. One of the ways to look at it is, for example, here. So this is an hourly chart of the S&P 500, by the way. So it looked like we had from the May lows 5 waves higher. Okay, you can really 1, 2, 3, 4, and 5. It followed what I would call Fibonacci extensions reasonably well, where the fifth wave should target, for example, 176.4% extension of wave one, measured from the low of wave two. So then you say, this could
So
be
was
the start.
this breakdown, well, you always have to reassess all the time.
Yes.
Can we put it in these terms that your long-term picture hasn't changed? It's just taken longer for this to develop, and that we could be on the cusp of it at new lows. I think you had a box down there around 37.40. I've seen that number before. And that we could be completing. And then I guess if that turns out to be a low, even the bears think there's a rally back to 43, 44. Bulls like you are looking for new all-time highs, right?
Yes, correct. So the problem is if you zoom in more and more and shorter time frames of edit waves, it becomes more and more variable. It's much better to zoom out. The bigger picture gives.
Well, we're not seeing anything on the screen right now, or no?
Not at all.
No, you probably are you trying to show something else? You have to start a new screen share.
Oh.
Just hit the green button again.
This is so weird because
don't worry about it. It's live TV.
All I get is a tiny little zoom screen.
Yeah.
There.
Okay.
That's so weird. Okay.
There it comes. Okay.
There we go. Sorry about that.
Okay, that's okay.
There. So so the focus now is on this zone. So in Elliott wave, as people need to understand, is the market is all about the probabilities of possibilities. So you always have a preferred wave count and a alternate wave count, and you track the market to see if it's going to follow the preferred wave count, and if it then drops below certain price levels, that preferred wave count gets invalidated and you move to the alternate wave count. So as I showed here, this was the preferred wave count, 5 waves higher, possibly a wave 1 or a wave A, because both are 5 waves, and then possibly a 2 and a B. And this is what I show to my members that sign up for my service that gives 3 per week updates, that if we drop below 4,045, we would target into the 3,900s. So that was already reached on Friday. So by Thursday, you already knew this was coming on Friday. That's the power of Elliott waves. You can really do those nice forecasts. But now I think the market had dropped too low to say, this is not a 1-2.
Yeah, it's not a retracement. It's another wave. Yeah.
No, it's another wave. So then you go, okay, well, then we have to go to the alternate Elliott wave count, which by Friday and Thursday already became the preferred, is that you had what I would call a irregular expanded flat B wave. So ever since the May lows, you had an A, a B, and a C wave.
Yeah.
And irregular expanded flats are very tricky because the B wave makes a low below the start of the A wave. So
and then is that 1.618 the B wave of A?
In this
bounce?
case, it's about there. Yes, I haven't done the fit math on it, but it's about there. And so it fits very nicely. So you have a 3-3-5 pattern, which is called a irregular expanded flat. So then you say, okay, we have our if-then scenario. So you have this alternate count kind of, on the back table sitting and simmering, and that once we drop below certain price levels, this will become the preferred. That's why I keep telling people, well, if you want to go long, make sure that you are really in potentially very high risk entry. So make sure you take profits quickly, set your stops.
I saw a couple tweets to you. Is it, is this it now? Is this it now? You kept coming back with, we have to wait for confirmation.
Wait for confirmation. What we want to see is 5 waves up. So we had the initial one, 5 waves up. And then we need to see 3 waves lower, and then the next leg higher. That's a nice one. That would be a much better setup than already thinking it's going to do something. Then, of course, the alternative is that we only get still 3 larger waves higher. It's always possible. The market reserves the right to really do 3 waves instead of 5. So you really honestly want to track 5 waves. But that doesn't mean you have to sit on your hands and not trade it, or you can still trade it. You always have to make sure whatever time frame your tickle is, so to say, that you take profits accordingly and that you set your stops accordingly. It doesn't matter if you want to trade 5 minutes or 5 years. You always need to have an exit strategy, right? If you don't have an exit strategy, you should not be in the market ever. And the exit strategy is taking profits and making sure you raise your stops and those type of good things. And that can be done on any time frame. If you do that, there's nothing to worry about. The fear index can be to 1,000. Everybody can be bearish. It's to the point where it's hilarious, where you can now buy T-shirts that say bull trap. Talk about being right. I've not seen this before already. The sentiment is down the drain. It is hip to be bear, according to the news.
I like this stuff.
Yeah. What else did I see? Something was extremely bearish in the news. Sentiment is, of course, according to sentiment indicators, completely down the drain. But those are conditions, they're not triggers. Price is the final arbiter.
Right.
So, when you say, okay, I have my preferred wave count, why do I prefer it as a 1 and a 2 and not as a B? Because now the B wave was right. Then you say, you know what, I'm going to look at, for example, other indicators, which is in this case, we had a very strong market breadth rally going into last week's highs pretty much. So we had very strong readings, which most of the time, if you go back in history, coincide.
Yeah, that is pretty strong.
Yeah, that was really strong here on the right hand side.
Hasn't been that strong since the COVID low.
Correct, absolutely correct. So then you start to add the puzzle pieces together, and you think, you know what, we might have some legs here. But I always say price is the final arbiter, right? The first thing is price. Price determines everything. Market breadth.
Price is the man.
That is the man, absolutely.
Go ahead.
And then you say, okay, well, the market breadth seems to support higher prices. We had almost what we call a thrust event. Some other indicators had a thrust event, but apparently the market decided it was not good enough, and lower we go. I think the futures are down pretty much. And then you simply go back and you say, all we do is we anticipate, we monitor, and we adjust. So we anticipate the potential new impulse, we monitor for it. We already know that if it's going to break down, that the market has another option, which is the alternate count, and then you move on. And that doesn't mean you move the goalpost, as people say, or you don't know what's going on. No, I always say you have to be careful of people that never present an alternative wave count. You might be right for 5-6 months in a row, but at some point you're going to get extremely burned because you don't understand that the market is about probabilities of possibilities. So it has these two options. Why did I keep this option here? Because this decline was only 3 waves. If I look at it very accurately, and I go like this kind of kept me awake at night. I don't understand this decline into the May lows. Yeah. And now that we're dropping lower below the May lows, this all makes sense. So the alternate wave count is not preferred. That then brings me to the big picture. And this is what I like. You want to kind of zoom out. So this is the S&P 500 since 1922. I know the S&P 500 technically has been around since the 1950s. And these are just simple yearly candles. Every candle is 1 year, open and close. And every Elliott waiver that I'm aware of that I would think is worth its weight in salt knows that the 1929 all-time high was what we call a super cycle. You can call it a cycle or whatever name you want to give it, but that's a wave 1. And then we had in the 1930s a wave 2. That was the big crash, the biggest crash ever in the stock market's history. And we're now moving towards a super cycle 3. Now, question is, has this super cycle 3 already completed? Yes or no? Well, if we look at simple yearly candles, it suggests we need 1 more up year and then we complete it. It could have already completed if the up year is a part of what I would call a large flat. And flat waves are quite common for fourth waves. If you look here at cycle 4, it was a flat, an A, a B, and a C. Just like the flat I showed you on the hourly time frame, you can see it here on the yearly time frame. So the market is fractal. So what it does in an hourly time frame, it does it on the yearly time frame as well. So the market pretty much declined for 3 years, went back, right, in the 2006-7 to the all-time highs, and then dropped really hard. And most likely super cycle 4 will be something similar, but on an even grander time frame. Think about a decade.
Okay, that's
or so.
interesting, a yearly look at that. Yeah, so where would that come in? 9, 20, 30? That's way out there.
No, no, this is not a timing or a
Okay.
forecasting.
It's
It's
just-
simply trying to project how things are going to move based on simple closing prices. In the
Okay.
sense that, okay, a closing price is a corrective year, right? Down years are corrective years.
Do you know if before the crash it was a 9-point cycle to the top in 29? Because I see it was in
Yes, it was here.
Yeah.
It was. We haven't gotten there yet.
Yeah.
I cannot make it 9. So what could happen is that the next rally will be a B wave of a irregular flat, for example, and that the market still tries to reach to 5,500. One of the interesting things, for example, I showed you here, we have this large flat wave 4. So this was, if we go back here quickly to the 1930s, this was a zigzag, what we call. You have a leg down, of a down, up, down. Very simple. Yeah. It's called an ABC. It's a zigzag. If you go into Elliott wave, it's a zigzag. And then most of the time in Elliott wave, the rule of alternation says if the wave 2 is a zigzag, then the wave 4 is a flat or a triangle. Most of the time it's flat. Triangles are a little rarer than flats. So if we had a zigzag supercycle 2, which it was if we zoom in on a monthly time frame, it's most likely going to be a flat supercycle 4. If I'm going to zoom in a little bit more, so this was a flat cycle 4. Then the 2020 low was also a flat. I'm going to see if I can find you the chart. Let's see, lots of charts here. Let's see here. Well, let's go. Yeah.
Okay, eventually you're looking for 6,000. It looked like on that one chart. You have a lot of charts.
Yeah, a lot of charts.
Yeah,
me,
you live them. Yeah.
Yeah, you have to track a lot of stuff. So here is a zoom in on the 2018-2020 time frame. So also here we had a B, and a C wave. So we had a leg lower, a leg higher, which made a new all-time high, and a leg lower. So this was an A, B, and a C. Now here I have the B wave topping out here. I thought it would be a regular flat, but this is called irregular because the B wave goes beyond, in this case, the all-time high. And then we had a crash. And that crash, by the way, was 5 waves lower on the daily time frame. It's absolutely beautiful. If you look at the crash, let's see here if I can find it. This is the market crash in 2020. 1, 2, 3, 4, 5, picture perfect. So then we had a B wave top here in February 2020 and a C wave low of a irregular flat wave 4. So far, the cycle wave 4 made a new all-time high. The primary 4 made a new all-time high. Most likely, the super cycle 4 could do something similar. It all depends, I guess, on market environment, how bearish we get, the Federal Reserve, all those variables go in there. I'm not too much of the why type of person. It's fine. Price will tell me because price is the final arbiter. She said price is demand. And that was just going to follow nicely.
Okay, so what's your strategy going forward on your alternate count?
That one, well, this one is off the table now.
Right.
So this one, I'll just let it fill in itself, track it. Most likely this is a C wave, a 1, 2, 1, 2, and then you get the 3, 4, 3, 4, 3, 4. As I showed here, I'm kind of tracking these 3, 4, 3, 4, 5 waves. So I think we have a couple of that we're now still in the third wave of the C wave. And after 3 comes 4, and after 4
comes 5. What's the time frame on this chart? Daily?
This is daily, sorry. Yes, this is a daily time frame. Okay. Again, I think I started with this one. So then we should see how this is going to fill itself into the ideal target zone, the focus for now, and move on from there. But eventually we'll get some updates and some further down days, which will be the 4th and 5th waves to complete this C wave. And
You have
the
a
C
view
wave,
on, okay, go
Mhm.
ahead, I'm sorry. Go
and
ahead.
that should last a couple of days at the minimum to fill in that low. That will take to complete this orange 4, this gray 4, and then etc. That will
Yeah.
take several days at the minimum.
Could we be
Fourth
there
waves,
by the solstice? That's the
yeah, we could
21st.
be. We definitely could be. That seems like
Okay.
a pretty good timeline in
Oh,
how
hold on,
fast.
my tinfoil hat fell off.
Yeah.
Anyway, you have a view on rates, Arno? Anything? I mean, the
Uh,
bonds are about to make new lows, and the 10-year took out its previous high. Are you following the bonds or interest rates?
Unfortunately, no, I'm not.
Okay.
No.
Okay. And you have another guy that covers gold. So you're mainly watching the indexes. A view on the dollar,
I don't. The
oil.
view on the dollar.
How about oil?
Oil. Yeah, that was
I
been
know you
looking
cover
higher.
oil. So are
No,
people crazy trying to top pick the oil up here?
yeah, let's see. I haven't followed the commodities
Oh,
too
that's
long.
okay.
But the oil, let's
No,
see here. Yeah, so I have it in a third wave. Sorry, the
wow.
chart
Yeah, yeah. It's
has
okay.
has moved a little bit there.
Yeah.
So this was my original projection for the 3 and then a 4, and then this one should move a little bit lower, something like this.
So
So
you're
it looks
looking
like
for like, $200, right?
yeah, somewhere around there. I would say let's start first looking at about around 150,
160.
150, somewhere around there,
Yeah.
150 plus or minus 3
Okay.
or 10, something like that. Because
Okay.
then we know if it's only 3 waves higher or eventually 5. We don't know yet, right? So
Right.
that's the thing. We never know beforehand if it's going to be 5 waves or 3 waves. So we start off with the assumption that it's going to be both 1, 2, 3, potentially 4, potentially 5. Then we'll just let the market decide if it's going to be 5 waves or not. Most, by the way, big guys, they will sell into the third wave, and
Right.
then eventually, because the 5th wave is where the retail
Yeah.
investors jump in.
Right.
So far looks good. Yeah, so I guess around 150, 160 looks for a nice top.
Okay. All right.
Unless we start breaking lower. Yeah.
All right. So where can people, besides following you, Arnaud, on Twitter at Intel, that's Intel with 2 L's _invest. You could show your website and
Sure.
how would people get involved with you? One thing I noticed through this whole interview is that you're not just an Elliottician, but you're a disciplined trader because you talk about your stops and your money management and
Right.
if the market does this, so you're waiting. You remind me of people that wait for confirmation.
Yes,
Instead
correct.
of trying to guess and get the edge and then get cut. So yeah, so this is where people can find you.
This is where people can find me. It's called intelligentinvesting.market.
Okay.
So
You have a
they can
free
click on
trial newsletter, I noticed there.
yeah, so they can sign up. I have 4 or 5 different services. If you don't like Elliott Wave trading, for example, you can sign up for my trading alerts. It's where you get an email 15 minutes before the market closes. It gives you alerts on all the ETFs that track the major markets. That trading service is up about 10% for the year now. I think it's clearly market beating. So you can do short term, intermediate term, long term. It tracks all the ETFs. You get an email. Same for the cryptocurrencies. You can sign up. You can get the regular crypto trading.
Where's the bottom in Ethereum? 400?
Yeah, it's definitely dropping lower than I ideally have seen. I would have liked around 1,500 plus or minus 100. So now that we've broken below it, I think the next level to watch is around 1,000.
Yeah.
But it's
what
it's
a Baton Death March.
One more time.
Well, that's historical. That was during World War II, the Baton Death March. So anyway.
I'm not sure.
Yeah.
Before my time.
It's a little history from
Yeah, it's a little history. But
anyway, so go ahead.
So yeah, I follow cryptocurrencies. Same, I do the Elliott Wave counts on the cryptocurrencies.
Yeah.
I knew we were talking, I think already in January of this year. I sent out a special alert to my members. Careful out there. This
Yeah.
looks like we're starting to put in some major top here. I do start to get bullish, definitely on Bitcoin, but I do need to see again a reversal, higher highs, higher lows, right? That is the sign. I don't see it yet. It's so far just only lower lows and lower highs. I follow it. You can get the same. You can get the trading alerts if you don't want to use my insights for making decisions on the trade. Again, I don't tell you what to buy.
Yeah, if Elliott Wave blows your mind, you could just get the trades.
Just get the
That's
trade
what
alerts.
you do it for people that just don't want to absorb all your
Exactly. This is as easy as 1, 2, 3. All it says, buy, sell, hold. You don't have to do it. Nobody's putting a gun against your head. But if you do it, then you've got to follow all the signals, because the signals know much better. My trading alert service, for example, short term, went already into inverse ETFs last Thursday. They're up 10, 15% by now. Trades. That's how easy it is. There will be losing trades. Just as your previous interview or the session that was going on and I was listening in, such a great remark. Like, I don't know who it was who said that.
Blake.
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 There will always be losing trades.
We're just real with our community. That's all.
Absolutely. If you cannot handle losing trades, then you should not be in the markets. But if you keep your losses small and let the runners win and take profits and all those things, but cut your losses, you'll do fine in the markets. You will. If you do not, then you will get destroyed, and then you will send me a nasty email saying it's my fault. That's how it goes. Now we take full responsibility for our own work. And if you can't, or don't want to listen to a 15, 20-minute video every other day, then just sign up for the trade alerts and you get them. And it's market beating. The performance is on my website. I'm up on the S&P 500, 15%, and it's down 13%. That was by the end of May. It's down a lot more now, of course. And the trading systems are up because they go into inverse ETFs, right? It's kind of like shorting the market, which is great.
What do you use for the S&P?
We use the 3-time ETFs for the short term, which is based on the daily time frame.
QQQ.
For the Nasdaq and the Nasdaq 100, and we use, of course, SSO and SPY and QQQQ for other time frames, because you want to use the right ETF for the right time frame. The leveraged ETFs are not appropriate for long-term
they have
investing.
decay. They have decay like options, not as extreme, but they do have decay.
They do. So if you're going to hold them for a long term and sit through a very long correction like now, it will take a lot longer for them to go back to even break even. So that's not the right vehicle. So you've got to use the short term for the 3-time ETFs, and the long term is the SPY and the QQQ, and you get a nice dividend on them as well. So that's what we're trading and tracking. And the systems always know best. Why? Because they follow the trend. And if the trend is your friend, then you get a friendly return in your portfolio as well. No brainer. It's super easy. 1, 2, 3. That's all you need to do.
Thank you, my trading warrior brother, Arnout.
Thank you for having me, Dale.
Yeah, good luck, and have a great trading season. And I root for you and all the people you advise, and appreciate you being here with us and sharing your accounts with us.
Thank you so much. I hope people learned a little bit, got a little bit of insights, and stay positive out there. I know it's very hard. A lot of people are very negative currently, but be nice to each other. Go pet your dog, hug your wife. It's all good. The markets will recover. If you saw my big picture charts, we're not done yet. There's still 20 decades of a bull market left. And currently, we might go through a nasty one for now. But yes, I still think eventually we'll get to 5,500. Maybe not as quickly as I thought we would, but it's okay. We anticipate, we monitor, we adjust. But I think for the long term, we'll still be fine. If everything goes to zero, we're all going to be dead anyway. So that works, right?
Yeah. And Arnaut's best call, wrapping it up, is kindness. Everyone use a little kindness with just be kind.
Be kind.
Be nice. That's it. It's not complicated.
No, it's
there is no alternate count for being kind.
No, there is not, Dale. No.
So we'll leave you. What kind? Kind bud. All right. All right, everyone. Well, have a great day. Thank you, Arnaut. I'll get a hold of you on Twitter. And everyone here, you could join the team on the Morning Edge in 12 minutes. remember, don't just count your pips, count your blessings, and we'll see you all tomorrow for Turnaround Tuesday. Adios. Thanks, Arnout.
You're welcome. Thank you, Dale. Take care. God
All
bless.
right, buddy.
Bye.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.